Here we go. All right, welcome everybody. This is a first time home buyers webinar we got for you guys. Everybody's filing in here. We're just at 7 o'clock here. We're gonna let people file in still, give it a couple more minutes. We've already got a lot of people in here already. That's a good number to start us off with. So but as you guys file in, please use the chat as much as you can. Let's even make sure it's working. Let us know in the chat if you can hear us, you can see us. Make sure that's all working good before we get going, and then make sure the chat's working good too. We're going to give it about another couple minutes here. So, and again, as we go through this, there's going to be a lot of information to cover on this, like a lot. So do your best, utilize the chat as much as you can. Myself and Ryan are going to be on here the whole time. Ryan's going to be in the chat a lot of the time. So if you guys got questions, just keep firing them in there. We'll try and answer them as we're going along. If not, there is a Q&A at the very end of this where we'll stick around and answer all these questions for everybody too. So don't feel bad about that if we miss something. Also, this is recorded. So if you guys have to step out for whatever reason or miss some of it, it is recorded. I am going to email the recording of this in another day or two after this is done. So you guys will have that and you'll be able to rewatch what you missed or get a hold of us if you want to reiterate on some things. We do ask that if you do have questions, try to keep it as generic as we can. If it gets a little bit more personal, it just might tie up into the time a bit. And then if you really have a personal question, more of a one-on-one with us, then you guys can definitely get a hold of us. That way we'll be able to answer those questions. But yeah, utilize the chat as much as you can. Participation here is great. It helps us help you guys is really what it is.
And you know what, guys, as Andy mentioned, if you do have anything that is really on that personal level, booking the one-on-one, we're going to be putting that booking link all the way through the presentation today. So please feel free to click that booking link. There it is right there. So for you, we're going to keep putting that up as the presentation goes along. So booking that one-on-one with Andy and I, really a great way to get those personal questions and that process started. So we're going to keep putting that up. But if you do have any of those personal questions, know that that booking link is probably the best resort for you there as well.
Perfect. Yeah, and I see a question. Is this different from the first one? So if you've attended this webinar in the past, there hasn't been any changes to it. You're not, we're going to go over the same exact stuff as the last time. So there's not like you're going to be missing anything from the first one you've been. It's just going to be a refresher. It's the exact same stuff as the last time. No new updates really, except for just the market updates really. But we are about 3 after. We have about 26 or so people in here. So let's we're going to get going here. There is a lot to cover, so I don't want to lose track of time as we go. So first things first, as always, you guys got that message when you started off when you, I guess, actually booked with this and signed up for it. You had that text that said you're going to get something for free by joining us, and that's this here. So I do this for everybody. Just for signing up today and joining us this evening, you guys are all going to get a copy of my complete guide to buying a home book. I developed this about a year ago. It's chock full of great information on what it takes to buy your home. You guys are going to get this in an email as well at the end, along with the recording. You can read it on your phone, your tablet, your e-readers. It's in a digital version, so you're all going to get that for free. Plus, I'm going to add in a buyer's guide, which is just a very, very condensed version of why it's so great to use us to buy a home. What we do for you and how to make it an easy process. So again, I want to thank you guys for showing up here tonight and taking time out of your evening with us here. And so as we get going, as you're buying a house, for a majority of us, it's going to be the most expensive purchase you're going to make in your life for a lot of us. So if you guys are feeling any of this right now, concerned, stressed, intimidated, anxious, uncertain, especially when you hear stuff in the news and the media about the way the market is and stuff, our goal by the end of this webinar is to at least alleviate most of that. And if not, work with you to help make this a really easy process for you guys. We can only do so much as the market allows, but Ryan and I strive to make it an easy process and that you guys are well taken care of. Yes, there is a recording. I will, once this is done and recorded, I'll upload it tonight or tomorrow, and I'll get you guys a link, hopefully for tomorrow in an email. So don't worry about that. So yeah, our goal here is to make this, to give you all the information and not overload you guys right off the start. So before we get into it, I just want to do a little bit of introduction so you know exactly who it is that you are talking with. So first off, I myself, you guys get the pleasure of hearing me for most of this webinar, but I am Andy Goddard. I'm a realtor here in Saskatoon. I first started out with Royal LePage, but I've since switched to EXP last January, so almost a year with them now. It's been great. It's helped me serve a lot of clients a lot better with more tools at my disposal, really. And I've helped a lot of satisfied buyers and sellers through the years. I live in Warman myself with my family. So my wife, my son, my daughter, and my dog, we live in Warman. We've been here since 2016. And Saskatoon is my main area that I service, but I can go anywhere in Saskatchewan if I need to. So, but I like to, stick around my home. But I was born and raised in Saskatchewan. I come from a small town of Maple Creek, Saskatchewan. My dad's a general manager of a bank, or of a credit union, I should say, and my mom's a school teacher. So I called Saskatoon and Saskatchewan home for many years. I've got a lot of family here, so I like finding people their homes here and building a life here as much as I have. So that's who I am. That's who's going to be doing a lot of the talking today. I am going to put in here just a site here for you guys. So this link in here, this link tree, has all my social media accounts. So my personal social media is my business one, so you know exactly who it is I am. I'm pretty transparent. I don't hide a lot of things from anybody. So if you guys want to see what I've been up to, go ahead and check those out. But that's me. I am Andy Goddard, a realtor here in Saskatoon. And so when you're buying a house, you got to have you got to have a realtor to help you buy a house. You're also going to need somebody to help you with a mortgage, and that's who I got here to partner with me today. So I'm going to let Ryan take over and explain and introduce himself to you guys.
Good evening, everybody. My name is Ryan. Yes, I am the mortgage professional that works hand in hand with that absolutely amazing realtor partner, Andy Goddard, on the other side. So I am working with the mortgage group. That's the company that I do my mortgages under. I have been in mortgages for almost 25 years now in the Saskatchewan markets. I am Saskatoon born and raised. So I've lived in Saskatoon for most of my life. But as Andy mentioned, we do also service, not only the greater Saskatoon market in, say Martensville or Warman, but anywhere in Saskatchewan, we're pretty comfortable, getting you property and getting a mortgage as well. So feel free, if you are looking anywhere in Saskatchewan, to reach out to us to be able to help through that process. I've been married for 28 years now. I have 2 boys in their mid-20s. And my wonderful wife, Michelle, and I we love to travel. We love to spend time at the lake. And honestly, I absolutely love the mortgage and real estate industry here in Saskatchewan. It's a lot of fun, but it's great to be able to help first-time home buyers navigate through difficult times, difficult markets, talk about rates, talk about housing, and really be your voice to guide you all the way through the process. So we're here to help. We've got great years of experience, and we're looking to guide you and walk with you all the way through this process. Back to you, Andy.
Awesome. Thanks, Ryan. So yeah, like Ryan said, this is a big process. There's a lot that goes into it, and you need some guys that are going to help you out. And the fact that Ryan and I work so closely and great together, it makes your home buying process super easy and super smooth. So that's what we strive to do. So again, if you guys got any questions, keep them coming. But that's who we are, and and we're here to help you guys. We're a lot of information coming at you guys here. So before we're gonna get started with it, again, keep the questions coming. We're gonna run through them all. But at any time, if you guys feel you want to move forward with either seeing if you can get pre-approval or anything like that, definitely book a one-on-one with us. We're going to be able to talk you through everything, right? If you guys just want to talk about anything else too, feel free to book with us. We're happy to provide any info we can for you guys. So as we get going, what I'm going to do here is just outline the basic steps to what it takes to start and finish to buy a home. I could go on forever with this, but we don't have enough time. So I'm just going to condense it very shortly here, but at least it gives you guys an idea of what to look for. So the first thing I tell anybody when you're going to buy a home, and whether it's you want to get out of renting and you want to finally get into your own home, the first thing I always recommend is to learn everything you can. That's why Ryan and I put on this great webinars, to provide you with all that information we can, and get you kind of understanding what it's going to take. So then the first step after that is if you're going to buy a house, you're going to need a mortgage. Unless you have all the cash to pay for the house, most people are going to have to mortgage their house. And that's where Ryan comes in. And so we need to get pre-approval from him. Let us know how much you can be approved for and what you can shop around for. right? So once you get that pre-approval with Ryan done, he says, you know what, you're good for this amount, you know, come, we'll talk and we'll sit down with you and we'll figure out what kind of house that you want. You know, do you want a house? Do you want a townhouse? Are you okay with paying for condo fees because it's just less maintenance for you? Are you looking for just an apartment style condo for yourself, right? Whatever kind of place that you want, we're going to try and find that for you. Depends on the bedrooms and garage if you need that, what kind of basement you're like, all that kind of stuff. We're going to sit down and talk to you about and figure out what place is going to be beneficial for you and your family. So once we get that sorted out, we jump onto the MLS and then we can see all the different properties that are available to be sold. And so we'll find the right ones. We'll start previewing them in person. I'll show you guys what it takes to, you know, what you're looking for and things like that, and what you should be looking for when we look at a house. And then let's say we find the one that's perfect for you guys. What we do is we put in an offer. So we sign all the contracts, we write a written offer, and we send it over to the other agent. And we go back and forth and negotiate on a purchase price. I don't go over the contracts in this. It would be nice if I could, but basically the contracts are so much in depth that I just don't have enough time to show you guys what's all entailed. But I do sit down with you one-on-one when it does time to sign those, so you know exactly what it is you're signing and what everything means in them. So once we get an accepted offer, when both sides agree to a price, then we get into what's called a condition period. So conditions usually are financing as a condition. So it gives Ryan time to start the final process to get your financing approved. It needs about 2 weeks, and it also gives us time to get a home inspection done. And if you're buying a condo, it gets us time to review the condo package and the estoppel package to make sure that's all good, right? It gives us time to make sure the place you're buying is good and the financing is good. So those conditions have to be satisfied in order to buy the house. If any of those conditions aren't satisfied, the deal is done and we go find a different place depending on what the reason is for that. Okay, so once all the conditions are satisfied, we lift conditions and the house is now in a sense a firm sale. We are just waiting for possession date. Now that depends on if you're buying a vacant home or there's an owner that's in there or tenants. We got to give them time to get out, but you know, usually it's about 30 days after we lift conditions, roughly, to when you can take possession of the house. So while we're waiting, you would go and you would sign with a lawyer and they would transfer all the documents over and get all that stuff, and the funds are transferred over and everything. And we finalize the sale that way. Once the lawyers are both good, keys are released, I go pick the keys up and I meet you at the steps of your new place on possession date. And during that time, we do a thorough walk through the house to make sure everything's good and it looks fine and nothing's out of the ordinary that we need to worry about. Once we do a thorough walkthrough and everything looks good, I hand you the keys and you are now a homeowner. And that's the basic rundown of what it takes to buy a home. Now, again, like I said, there's a lot that goes into it, but you know what Ryan and I do during the whole process is walk you through the entire steps. We explain everything and we keep you up to date with what's going on. We don't just leave you in the dark. We want to make sure you know exactly what's going on at every given time and walk you through it as we go. And if any problems come up, we're here to take care of it for you. So if you guys got any more questions on the whole house hunting process, that's fine. Throw them in the chat. Again, I can't touch a whole lot on it yet, but I'll be myself and Ryan will be sticking around for Q&A and we can answer everything on that. So, or you could just go ahead and book a call with us and we can discuss that all the way through. But the first half of this now, we're going to jump into the financing side of things. It's a major one. So I want to make sure you guys know what it takes to get pre-approved and what programs are out there to help you guys. So the first thing I want to touch on is the first-time homebuyer incentive program that the government of Canada has. Now, can anybody tell me, or does anybody know about this? This is a program that's been out for a while. It is here to help first-time homebuyers. So if anybody's heard of this, let me know. If you guys haven't, that's even better. I can elaborate a lot on it. And if not, that's okay. There's a lot that goes into this, and this is definitely a good program if you guys need to. So if you guys haven't heard of this program, that's okay. There's a lot that goes into this, so I'm going to explain here. So as of right now, the government has used about $1.25 billion worth to make home ownership more affordable for anybody that's buying their first home. So what it is, it's a shared equity mortgage in your property. So the government is investing into your home value when you go to buy it, both in the upside and the downside of the value of your property. So they're going to give you an additional 5% of a down payment to buy this house. And so this money they give you is not interest bearing. There's no payments to make on it. And you can repay this at any time without a prepayment penalty. So in order to buy a home, you have to have a minimum 5% of your own money to put down, and then this can help you out as well. But there is a catch to this that'll actually be beneficial to you guys, which I'll get into here. But just so you guys know, they are going to give you about 5% of a down payment as well, and it's going to help you out. So this is going to be a lot, so just bear with me here. So who can use this program? So anybody that's a Canadian citizen or a permanent resident. If you have a work visa, they are still allowing people on work visas to purchase a property. You just have to have, I believe, 183 days left minimum on it in order to purchase a home. So if you are on a work visa, definitely check out how much you have left on it, and we can still help you guys out that way. At least one homeowner must be a first-time home buyer. So if you're going in with your spouse, you want to make sure at least one of you hasn't owned a property before. You can still qualify for this. If you are going in with somebody, you have is make sure that your annual income combined doesn't exceed $120,000 a year. If you do exceed $120,000 a year, they just feel you make too much and you don't need their help. You also have to watch, there's a cap to this. So if let's say you make $100,000 a year, it won't let you buy a house over 4 times your annual income. So if you make $100,000 a year, you won't be able to purchase a property of over 400,000 because there is a cap on this, but there are some things we can work around. We can talk to you about that one-on-one, but just be aware that there is a cap to it. And also the maximum down payment that you put in plus this incentive cannot exceed 19.9%. Basically what it is that 20% down payment or more, you don't have to pay mortgage insurance premiums on. And this program is not going to give you, is not going to help you get over that 20%. So if you put 15% down and you still want to use theirs, they're only going to give you 4.9%. They just will not help you get over 20% of a down payment. So just a couple things to look at if you plan on using this. Just on a side note, there is another home buyer program here. So you can use your RSPs if you have any. You can withdraw up to $35,000 per person under this home buyer plan. And you can also use these RSPs for a down payment with the first time home buyers incentive program. They're not exclusive. You can use them together. So they both define a home buyer, first time home buyer the same way. We just recommend if you do have RSPs and you want to use them as a down payment, reach out to your RSP provider. We have had an issue before where somebody said they were going to use their RSPs. And as we got going with the offer and accepted offer and the financing started, we found out that they can't use those RSPs. So the deal crashed and we had to kind of restart over. Okay, so just if you want to use RSPs, that's fine. Just make sure that your provider knows you're going to use them and that you can withdraw them. So anyways, back to the first incentive. So when do you pay this money off? What 3 options do you have? Well, one is if you decide to sell the home in the first, couple of years, if you decide you want to upgrade, you use the sale proceeds of your home to pay them their amount back, and then you continue on. You can, if you live in it and you don't intend on moving anytime soon, as long as you pay it off in the first 25 years, either of your own savings or mortgage refinancing, you can pay it off that way. Or if the last way is if you live throughout in your home and throughout the entire mortgage term and you pay off your mortgage, you're done. You have to pay them back the money either in a lump sum again of your savings, or you can take out a small equity loan on your home and you can pay them back that way. So those are a couple of options of paying it off, just so you guys are aware. Now, I just want to make you guys aware how this investment works and what to watch out for as well. So let's say you're going to buy a $400,000 home. They're going to give you 5% for that, which is $20,000. Now, remember, this is an investment. They want to see their money grow. So let's say your house increases in value to $500,000. Well, now they want you to pay them back 5% based on the value of your home at the time that you go to pay it off. So if it rises to $500,000, you have to pay them $25,000 back instead of that $20,000. So this is why they're investing. They want to see your property value grow like we do, so their investment grows. Now, if your house raises $100,000 in value and you only have to pay them an extra $5,000 back, it's actually not that bad considering you just gained $100,000 worth of equity in your home. Okay, so just want you guys to be aware of when you go to pay this off, it is based on the value of your home at the time of paying it off. That's why you can't make payments on it, because they need to know that value number. Also, on the flip side, if your house falls below that value, you have to pay them back just based on the value. So if it drops to $300,000, you only pay them back $15,000. But just so you guys are aware, that's how this works, is they're investing in you. So that value of money they give you is going to grow and fluctuate with the amount that the home is valued at that time. Okay, so just keep that in mind. Now, if it only raises like $25,000, so it's now $425,000, you're only going to give them a little bit extra back. So it's not like it's a drastic amount of money that you're paying them back, but you guys just need to be aware that that's a possibility, right? So now, if you guys are wondering where the benefit lies to this, here's the two ways that this is going to benefit you guys a lot. All right. So let's say you guys want to buy a home, $400,000 of purchase price. You guys have to submit your own 5% of a down payment, which is $20,000. So now you're going to be borrowing $380,000 from the bank, and that's it, right? That's all based on just you. Now the government's going to essentially double your incentive or your down payment to 20% or to 10% at $40,000. So now instead of borrowing that 380, you're only borrowing 360. So now your monthly payments are cheaper because you're borrowing less. And when I mentioned about those mortgage insurance premiums, when you're putting 5% down, they're at their all-time high. But if you put 10% down, it drops those even, it drops them actually pretty drastic. If you put 15% down, it drops way more. And then until you hit 20% where you don't have to pay those mortgage insurance premiums. So basically them giving you, doubling your down payment, giving you a 10% down payment, it lets you borrow less from the bank and less mortgage insurance premiums, which makes your monthly payments cheaper. So that's the one way why this is beneficial. It's just cheaper payments every month, okay? The other benefit to this is, let's say that you can be approved for $400,000 for a home, but you only have, let's say, $10,000 saved up. Well, in order to get pre-approved, they have to take how much your down payment is, and that can cap you what you can afford. So if you only have 10,000 saved up, that's good for 5% of a $200,000 home, but with your income and things, you can go for more. You just don't have the funds. Well, this can come in and essentially double your down payment. So if you have $10,000, they can give you another $10,000, which brings you to $20,000, which now boosts you up to a $400,000 home minimum. All right. So that's where the second benefit, which is one that we use most often, is that it just helps you get more of a down payment to help you get into a bigger home, let's say. So if you guys, hopefully you guys follow along with that. But again, to reiterate, the two ways this is beneficial is either give you cheaper monthly payments every month for the start, or it boosts your down payment up a little bit more to put you into a bigger house. Okay. So if you guys need to use this program, it is a great program to use. We helped a lot of people with it. But if you don't need to use it, then that's even better. Okay. But this is just an option for everybody out there. So I see there's a lot of questions coming. I got to keep going through this, but Ryan, I see, is crushing it and answering a lot of questions. I am going to put in here again, if you guys want to know more about the incentive, and if you need to use it, definitely book a call with us. But I'm going to get into what it takes to get pre-approved and how this is all going to kind of work together. So another mistake is not getting a pre-approval. You know, it doesn't happen that often anymore, but it used to, where a while that people weren't getting pre-approvals. They're just going to go shop for a home and then find out after if they can get approved. We just want to eliminate that whole confusion, find out exactly how much you guys can be approved for and shop within that range instead of guessing. Okay. It's a huge thing to get a pre-approval, and it's so worth it in the end. Basically, just so we get that number, we know exactly what we can shop for, because there's nothing worse than thinking we're going to buy a $500,000 home, but you're only approved for a $400,000 home. The $100,000 difference in homes is huge, and we just don't want that to be discouraging to anybody. So we want to make sure we know we can shop around before we even get started. So now, the three things that are going to make up mortgage approval. Now, these three things all have to work together to get you an approval. Okay, so the first thing is credit. So they want to see, what's your credit like? Have you make payments on time? You have a lot of debt racked up? Are you good with money, right? What's your credit score? And if you're thinking credit score, they want to see around 620 to 650 as a start. And obviously anything above that is great. Anything below that, we're going to have to look into different options. Okay, but 620 to 650 is a good start. And they want to make sure there's no, you know, you're not getting debt collectors coming at you, or you're not missing a bunch of payments and things like that. We want to see a pretty good, strong credit. And then they're going to want to see your income. So they want to know how much you make. So if you have a salary position, that's the best, because we can just get a letter from your employer that states this is how much you make per month or per year, or whatever it is they pay you. But as long as it's a salary and it guarantees your hours, so we can see that as well. So that's a big thing. If you don't have a salary position and you make like an hourly wage, we need about 2 years worth of tax returns so they can see about what you make in a year. Now, before I get ahead of myself, for anybody that's new to Canada that hasn't been here for very long, like say less than a year, even less than 6 months or anything like that, there is there is a new to Canada program that's out there to help anybody that has come here to Canada recently. And that helps you with this credit and the income where you don't have 2 years worth of that. Ryan has a great new to Canada program he's going to touch on right away here, so I won't get too into it. But just so you guys are aware that just because you're new here and haven't established this yet, there is a program for you. So anyways, back to the income and the credit. So then the third and final thing they want to look for is a down payment. Now we've talked about down payment. You do have to provide your own 5% down or show that you have some money saved up for a down payment. And now that down payment can come from a few different ways. So one is going to be your own savings, which is the most common one. Two is using your RSPs, which I've touched on earlier. Three is you can get it from a gift. We say a gift from the bank of mom and dad, or an immediate family member can gift you the down payment. You just need them to sign a letter stating that they're giving it to you as a gift, right? And then you can use that as a down payment. And the fourth way is more inclusive, but if anybody is here who's part of the Métis Society of Saskatchewan, the Métis are providing a home buyer's grant, which is giving you up to $15,000 to use as a down payment. So if anybody here is part of the Métis Society and wants to look into that, definitely reach out to me. I can get you some good info on that. The only thing you can't do with that Métis Society grant is use the first-time home buyers incentive with it. You have to use one or the other, right? So that's just a couple of things. But anyways, like I mentioned before, down payment does have a strong role in what you can be approved for. If it's based on your credit and income, you can be approved for 500,000 or 400,000, but you only have a certain amount saved up. That will limit you, right? So that's why the incentive that the government can give you is definitely helpful in that way. So that's the three things that they're going to look for when it comes to getting mortgage approval. Now they are underwritten, so when we have this process going, the underwriters are going to review the income, the credit, and the down payment source. But the awesome thing is it's super reliable. And it tells us that maximum amount. So now we know exactly the range that we can shop for. So we're not getting out of our budget, and we can work within that budget and find the right place for you guys. So that's the nice thing about it. It's such a huge thing. So again, if you guys are thinking you want to get into this, definitely reach out to us, because not everybody is not such a black and white thing, right? Every individual is different. If you and your best friend make the exact same amount of money, you guys could have drastically different approval amounts just based on your credit and your debts and your down payment, right? So just because one guy could get it off of his own stuff, that doesn't mean your stuff is going to be the exact same, right? It's based on each individual. So it's hard to just gauge it on different people. We have to basically do a one-on-one with you to figure out what you can be approved for. And that's what Ryan is so great about, is he's able to explain everything to you and figure out what's going to be the best option for you guys going forward. So that's a bit about how the approval process works. Again, if you guys want to move forward with that and find out what you can be approved for, definitely book a call with us. We're going to get you set up that way. But now I feel like I'm rambling on a little bit. I'll let Ryan take over, and he's going to tell you guys, anybody here that's new to Canada, Ryan has this fantastic program for you guys. So I'll let Ryan take that away.
Well, after that introduction, it better be good. Hey, wait, one of the things that we specialize in, guys, is dealing with our new to Canada friends that have recently immigrated into Canada. Now, one of the things that we always talk about is the amount of people that are coming into the country every year. One of the biggest segments of the first-time homebuyer market, and one of the largest drivers of housing growth in Canada, is new immigration, and we're seeing a lot of it coming in. Once COVID really opened the doors back up to the borders, we're seeing new records of new immigrants coming into Canada, which is great to see. Now, what we do realize is that when you're coming into Canada, you're not going to have a lot of credit and things like that established newly in Canada. So the government has developed these fantastic new to Canada programs. They are run through our mortgage default insurers, CMHC, Sagen, and Canada Guarantee are the default insurers that run these programs for us. You can still get in as low as 5% down if you've been in Canada for 12 months or longer. And if you've only been in Canada for 6 to 12 months, then you will require 10% down, to get into that new to Canada program. As Andy mentioned, though, one of the biggest advantages to that first-time homebuyer incentive is that incentive is also available to our new to Canada clients. So, if you are here 6 months in Canada and you only have a 5% down payment saved, you can actually use the first-time in homebuyer incentive for your other 5% to get to that total 10 for the program. So 5% for your own, 5% from the first-time homebuyer incentive. You have your 10% down payment. You can get into that new to Canada program, if you've only been in Canada for 6 months. Now, I just want to talk about some of the biggest things and factors that we do see that are really, really important for our first-time homebuyer, new to Canada clients to know. Number one, employment. You do have to have good, strong, full-time employment, at least for 3 months. When you do come into Canada, really, really important. So if you are a newcomer into Canada, you do have to be permanent, full-time employed for at least 3 months to qualify for that program. Now, a lot of people come in, and this is just kind of personal, what I've seen for personal experience. Watch how you are paid. If you are a full-time 40-hour guaranteed salary, that's perfect. But a lot of people are coming in, and we're seeing people coming in on short-term contracts or non-guaranteed hours, things like that. Unfortunately, those don't qualify as a full-time permanent employee. So really watch things like a short-term contracts or non-guaranteed hours. Make sure that you are a full-time guaranteed hours employee to qualify for that first-time homebuyer or for that new to Canada program. Number two would be the down payment. That's kind of the other thing that I do see a lot of new to Canada friends coming in, and we hear lots like, oh, I still have money overseas, or I've got money in multiple accounts. So when you're coming over right now, I'm telling you, get your down payment in order. Get it put into one savings account. Have it sit in there for a minimum of 3 months. Gather it all together. If you've got money coming from overseas, get it here today. Bring it in. Get it transferred over. We'll track the money typically for that 90 days, but get it into your Canadian account. Let it sit there. Let it grow. It's really easy for us to track if it's already in Canada, as opposed to having you get 20 different bank statements from different accounts overseas. It can be really time consuming. So get your down payment in order, get it into that Canadian account, and let it sit there and get it ready. Okay. One of the questions we actually got tonight was on work permits. Do work permits qualify under the New to Canada program? Great question. Absolutely. So the two types of people that are coming in under the New to Canada program are usually coming in either under permanent residency status, which is fantastic, absolutely works. But the other side of that is people that are coming in on a work permit. And that also works under the New to Canada program. As long as you do have 183 days minimum left on your work permit at the time of the possession, we're good to go. So watch that work permit, watch the timeline on it. But yes, we can also make work permits work underneath that New to Canada program. As mentioned, kind of next on the list, yeah, we have options as low as 5%. So if you've been in Canada for 12 months or longer, what they actually use is a rental payment history and one other reporting utility. Usually it's a power bill, energy bill, SGI plate, anything like that. So 12 months rental history and 12 months of a utility payment, we can get you in at 5% down. You do have to be here over that 12-month period to have that work for you. The other side of that is if you've been here for a minimum of 6 months, anywhere from 6 to 12, we can still use 5% of your own funds as down payment. We would just need the first-time home buyer incentive for the other 5, or you would have to come up with all 10% out of your own savings. So anywhere 6 to 12 months, you do have to have 10% down payment to get into that New to Canada program. And as mentioned, of course, that first-time homebuyer incentive, really, really important. I think that's probably the biggest lift and the biggest benefit for that first-time homebuyer incentive is really to help our New to Canada friends get in. Usually they come in, they have their basic 5% down payment, and that extra 5% from the incentive really allows those first-time homebuyer, New to Canada clients to get into housing quicker. All right, Andy, I'm going to turn that back over to you. Hopefully that gives everybody a nice broad stroke of what the New to Canada program can offer. Biggest things, get your employment ready, get your down payment ready. Those are kind of the two big ones that we do see. We can help you with the credit side. We can build that through different things like bank statements and utilities and rent payments. But the biggest two, get that income in line, make sure that it's guaranteed hours, and get that down payment into your Canadian account. Back to you, Andy.
Perfect. Thanks, Ryan. That's a lot of great info on that. We've helped a lot of new to Canada people for sure that have come in using this program. It's a great program. Just have to make sure we get all the right documentation for it, and we can definitely make that work for you guys. I see Ryan's been hitting all these questions in here. It's awesome. So just keep them coming, you guys. We got a lot of stuff to take care of still, so I'm just going to keep moving on, but a lot of good stuff here. So one last thing when it comes to pre-approval, I want to touch on, because I have been asked this a few times, is using a cosigner if necessary. And yes, you can use a cosigner if you need to. They can be, a family member can cosign for you as long as they reside in Canada, either a permanent resident or a Canadian citizen, right? You can still use a first-time home buyer's incentive with a cosigner as long as you don't exceed that $120,000 a year combined salary between you and the cosigner. But they are committed to being a cosigner for you as long as you can't be approved on your own. And now there are risks for cosigners, obviously more for the cosigner side of things, because they are signing for your behalf. And if you don't make the payments, they are going to come after your cosigner. So you want to make sure everybody's aware of the risks, but it is an option. And then there are extra costs with this after the fact. So if you decide you can be approved on your own and you don't want your family member on the title anymore, you can go about getting them off. I just tried doing this with another client of mine. It is about $700 to do. So, I mean, if you want to wait till you sell the place and move to a different one, that's fine. But you just gotta be aware there are some legal fees to get them off of that, but it is an option. And again, if you're thinking that's something you might need, definitely reach out to Ryan, and we can, and he can definitely explain things a lot more for you guys. So that's, again, keep the questions coming. That's about it for the pre-approval side of things. I'm just going to touch on one more thing on the finance side of things before we get into the real estate side of things. So mistake number 3 is using your bank. Now I will use a little disclaimer here. I'm not bashing banks by any means. I bank myself with, I believe I'm with RBC. My dad has been the general manager of a credit union for pretty much his entire life. My uncle, his brother, was also the general manager of a credit union, and both my grandma and like their parents were in the credit union. So I come from a long line of people in the credit unions. So I have nothing against them. I just want to explain a little bit of why, what to watch out for when you're using like bigger banks. Okay. So just a scenario or two that I can run for you guys just to be aware of some issues that can arise with using a bank when it comes to this. So I'll just, like, when it comes to real estate doesn't sleep. Most of our stuff happens obviously like now in the evening when people are off work, or on the weekends when banks are closed. When I'm in when we're in like a multiple offer situation, or I need a question on the financing before submitting an offer, and what if we're doing it this time at night, if I need to get a hold of somebody at the bank, there's a very, very, very good chance, almost 100% chance, that they're not going to answer me till the next business day. And it's not very helpful if we're really trying to get an offer out there. And that's what happened to us the one time. I was helping a client sell their house to buy a bigger house, and we need to know if they needed bridge financing. And it was about this time at night. And of course, the bank, I just kept getting a voicemail saying, call back and we'll get back to you in a business day. Well, that's very not helpful at all when we're trying to get an offer accepted tonight. Right. So we went with it based on the fact that we're going to get it, and we'll talk to the bank the next day. And we ended up getting the offer accepted, which was fine. So as we're going with the process, financing was a condition, and I do not lift conditions until I get proof that financing is approved. Ryan will always send me a letter stating, here is your actual approval. You can go ahead and lift the financing condition, which is perfect for me. They did give me a letter, and we lifted conditions based on them saying, yeah, it's fine. What happened was the person at their bank did not do this right. I don't know what they did, but they obviously didn't do the right job, and they tried hiding the fact that they were doing it wrong and they messed up. And this is after my clients were telling me that, oh, their bank treats them so well and they don't want to use anybody else, because I did recommend them use Ryan, but they just loved their bank and they said they treated them well. But now we're about a week before possession date when we find out that they've screwed up very hard on their financing, to the point that they're not going to get the financing approved for this new house. The interest rates rose too high. They didn't submit the paperwork properly, and now they've kicked them out of their approval amount. So they were at over 400. Now it dropped them to just at 400. So they're about to lose the home they just purchased, the deposit that went with it, and the home they just sold is now being taken over by the new buyer. So now they're going to be homeless with a new baby on the way. It was a giant disaster. My clients were losing their minds. They were terrified they were going to have no place to live, and it was a disaster. And all the bank would do was just say, well, this is all we can do for you, too bad. And it was very infuriating. We ended up Ryan saved the day. In the very end, we called Ryan up and we're like, look, we need a bailout here. And Ryan worked his butt off for us, and he managed to get them the right approval amount. It was luck of the draw. We, saved the deal, saved in their house and everything, but just it was terrible. I probably tried calling the guy 1,000 times on my phone and he never answered me once on the phone. It was they ignored us. It was awful. It's a very terrible experience. Now, I am not saying that all banks are the same. Don't get me wrong. That was a one-time experience, but I had another experience recently. I'm helping them buy a place right now using their bank over in, they're in a different province. They're using their bank over there. And same thing, I try to get a hold of them constantly. I'll try calling and calling and calling to get some answers. And they just simply won't answer the phone. They'll email me when it's convenient for them, but if I need an answer now, they just never get a hold of me. And it's very, very frustrating. Now, again, not all banks are like that, but it's just been things I've been running into. So just some things to think about. If you like your bank, like my clients did and say they treat them well, there's nothing saying you can't go and get an approval through your bank. That's fine. But I always recommend that you take that approval and the interest rate they give you and bring it to Ryan. And there's a good chance, 99% of the time, Ryan's going to either beat that or match it and get you a better program with it. Okay. And if they can't, well, then there you go. But chances are Ryan's going to. Okay. So a couple things to realize when you're using a mortgage broker like Ryan, who's fantastic at what he does. He has access to over 30 different lenders' products. So like us, we can shop around for different houses. Ryan can shop around for different mortgage programs. Okay. The banks are restricted to their in-house products. So whether you're using RBC, TD, Scotiabank, BMO, whatever, they have their own in-house product, and that's what they're going to sell with you. Ryan will work the same hours as I do. Like I said, if I need an answer from Ryan at 7:30, 8 o'clock at night while we're doing an offer, Ryan's going to answer me unless, reasonably, right? I'm not expecting him to drop everything he's doing, but he will get back to me, especially if it's important. Ryan's always been great that way. Banks, like I said, they work their normal bank hours. If it's after hours like it always is, they'll never get a hold of them when you need them, right? It's just awful that way. Ryan's going to offer you the best mortgage rate up front, or the banks are going to offer bank posted rates, and they're usually the higher rates. So again, when it comes to interest rates, it's a huge thing. If the bank is offering you 4.9 and Ryan can get it at you for 4.6, that 0.3% saves you a lot of money. Okay, it might not seem like a lot at the start. Let's just say for a ballpark number, it's going to save you $100 a month. Doesn't seem like a whole lot, but add that up over the year. That's $1,200 a year. Again, you live in a house for 10 years, that's $12,000 now. You've saved $12,000 into equity into your home that you can use to purchase your next home. So I'd rather have you guys have $12,000 worth of equity to use than just burn it away because you like your bank and they have a slightly higher interest rate and it doesn't seem like much at the start. Okay, so it is important. Ryan can most of the time beat those rates and save you money. That's what we're here for, is to save you money, build equity, start getting you guys into some nice houses. Okay. Nice thing about Ryan is he works for you and his service is free. And the personal broker tends to work for you and the best interest of their employer, because they're employed by the bank. They want to make sure their employers are happy. Ryan wants to make sure you guys are solid. That's what me and Ryan do for you guys, and make sure you guys are, in good hands and everything's working solid for you, not for the sellers, not for the banks, right? It's for you. You can call or text Ryan or myself anytime with any questions. And same thing if the bank, chances are you're only going to go home on the weekdays during bank hours. Okay. And the other thing, the last thing to touch on it, is that bank penalties can technically be expensive sometimes if you don't know what they are. Ryan, at least when he's shopping around for different programs, can let you know what the payout penalties if you decide you're going to break your mortgage after a certain amount of years. And honestly, everybody does. I haven't lived in a house for 25 years. I've broken my mortgage to move and upgrade and things like that. So whether you're either upgrading because you're increasing your family, or want a nicer place, want to move to a different part of the city, new job, whatever the plans are, we want to make sure that when you go to sell your house and break that mortgage, that your payout penalty is little to none. Now, we can't guarantee it's none, but we can at least let you know what it's going to be. Whereas sometimes there can be other lenders can have balloon payments and things like that. We want you to be aware of. Okay. So this is why it's great to have Ryan's knowledge and expertise of all this backing you up every step of the way. Okay, that wraps up the finance side of things. Keep the questions coming, fire them away. Ryan's still going to stick around till the very end when we can do a Q&A, but I'm going to kind of transfer it over to the real estate side of things and a couple things to think about, and that can save you money on the real estate side of things as well. Again, I'm going to put the booking link in here. So if you guys feel like you want to move forward with any of the finance side of things or anything like that, definitely book a call one-on-one with us and we'll definitely help you guys out. But anyways, the first thing I want to touch on is new builds. Now I don't touch a lot on new builds because a lot of first-time buyers don't buy a brand new house. Chances are they buy a resale house and eventually work their way up to a new build. But it does happen from time to time that some people like to buy a new build, and I just want to let you know on some things. So so when it comes to buying a new build, builders are like the banks where they're working for themselves and they want to make sure they sell their product and nobody else's, right? Where I can shop you around to different builders products, and even resale homes to think what's the best fit for you and your family, right? I can tell you who the good builders are and the bad builders are. Obviously, I can't do it in this, but I can on one-on-one, we can see how that works out, see what builders are doing what, and go from there. We want to make sure that everything is sound in the contracts that I'm negotiating on your behalf. So things to look for with builders is they don't negotiate on purchase price. Just because if they, let's say they're building a whole block of houses, if they started the first one and you negotiate $5,000 off the purchase price, well, then the next house sees that it was 5,000 less, they're going to offer 5,000 less. And then it's just a domino effect that their one house that was 450,000 and their last house is going to be almost 400,000, right? It's just, they don't want to touch the price. So the purchase price is what it is, but what I can do for you to negotiate on your behalf still is negotiate things into it, whether it's appliances, if they're not included. Some new builds don't have appliances included, so I can negotiate an appliance package in for you to help you out that way. Most of them don't come with, if it's not an attached garage, chances are there's no garage, so you're gonna have to build a garage. There's a chance you're gonna have to put a basement in, and they have basement packages. I know one with Roheat Homes, their basement package is $36,000, and if you want a kitchenette down there, it goes to $55,000, and want appliances with it, it goes to $60,000. They have an attached garage, but to finish it, it's another, I can't remember what it was. I think it's about $8,000, right? So there's packages they offer, but sometimes we can try and throw that in the offer to say, look, we want you guys to, this fireplace, they're offering fireplaces too, like fake ones, the electric ones for, I think it's like $4,000. And we can always put those in and see if they're willing to give us for the purchase price and throw in a fireplace for us, right? So just because I can't negotiate a price for you, I can negotiate things to be included for you, okay? So that's a couple of things I do for you and that I can do for you to help you guys get a nicer home. You can go to a new build right away, but you're going to lose a lot of knowledge of other options and the negotiating power, right? They're just going to sell you what it is. Chances are they're not going to help you out anywhere, where I'm going to benefit and make sure that you're covered and not just what the builder wants. Okay. It's no different in price if you go straight to the builder or go through me. So you might as well just bring a smart realtor with you that's going to negotiate stuff on your behalf. Okay. That's the biggest thing. Like I said, I don't touch a lot on new builds, but just want you guys to be aware that you shouldn't go to these on your own, because you need somebody who's going to negotiate for you, not just buying something for them, especially the price of houses. Also in the contracts, there sometimes can be a clause in there that if the cost of materials goes up, like wood or anything like that goes up, sometimes your purchase price can go up to reflect that. So we want to make sure that the contracts don't have that in there. And again, you need somebody that's going to look over those contracts with you and for you to make sure you're not getting into something that's going to cost you more money in the long run. Again, we're all about saving you money when you're buying a home, not costing you more money. Okay. So that's a bit about new builds. I'm going to jump to one of my favorite things to talk about, and that's home inspection. Now, I know there's been a lot of questions thrown up in the chat, but I want to still kind of get engaged in here and just, does anybody know, and tell me in the chat if you guys know or not, what the average home inspection price is in Saskatoon? Just throw a number out there. I want to see if we're close to it, and then I can explain why this is such a good deal anyways. Oh, that's a good one. $200 is close for a condo, but not quite for a detached home. Anybody else got any ideas?
I got a couple that came through direct message. One at 2,000, one at 154. So we're kind of all over some great guesses, guys.
Okay, so yeah, I got one at 200 in direct, but the guy that I recommend, and now when I recommend contractors and providers for you guys, obviously Ryan's my main guy, right? But when we use a lawyer, I have a lawyer I recommend for you. And when I have a home inspection, I have a great home inspector that he's great with first-time buyers, explains things to you guys, and he is great. He's actually very reasonably priced For just a normal detached home, he's about $425 plus taxes, so it's about $460 to do. So it's $460 for this. If it's a townhouse condo, it's a little less. I think it's like $375, and then an apartment condo is about $275 because there's not a whole lot to do with that. But again, these are huge to do. This is a condition, so basically this has to be satisfied to buy the home. And this is a majorly important investment in your home. So you're spending $300,000, $400,000 on a home. You want to make sure that that this home inspection is worth it, and it is. Spending $450 to find out everything that is to know about your home is a huge thing to do. Like, it's not, you know, it's a small investment to learn everything. So again, with these inspections, it's a condition, it has to be satisfied enough for it to go forward. If there's something in the home inspection that's major concern, you can walk away from the deal and no issues there. Your deposit is safe and all that. So a couple things that I can say about these home inspections, they cover everything. So when we're doing walkthroughs of previewing houses and things like that, we're looking for things, and we can only see so much. Obviously, we can see if the windows are rough shape, if the shingles are in rough shape and things like that. We can visually see what the house is like and base our offer off of that, but we can't see everything else. And that's what a home inspector does. They will go in and they will test everything: your electrical, your plumbing, your furnace, your hot water heater, your air conditioner, every appliance in there. They're going to test to make sure those are all working good. They're going to go up in attics to make sure the insulation is good, there's no leaks, there's no mold. They're going to look through the walls with their cameras and make sure the insulation is good. And just overall give you, and they're going to check everything: the foundation, they're going to check the outside of the house, the interior, exterior, garage, everything. They don't miss a thing. It's very extensive inspection. It takes hours to do. We show up at the very end just to do a quick walkthrough, but he's there about hours beforehand, usually about 3 or 4 hours. And it's a big book of everything. So the home inspector, a certified home inspector is who I use. That's who has to do the inspection in order for us to use it as a condition. If your friend will inspect it for you and they're not a home inspector, we can't go back to the negotiating table with that, because it has to be a certified home inspector. So anyways, a couple examples of what I'm talking about is if there's an issue with the house, like I'm going to go major to minor. So major, if there's foundation issues or mold or something like that, that's huge. You can walk away from it and we'll just walk away free and clear. If there's other things like electrical is a bit rough, or there's an issue with the furnace or things like that, we can negotiate either things to be fixed or knocks them off the purchase price, so you guys can fix it when you move in and save you a bit of money that way. Just an example, one of the most recent houses I've done, doing a walkthrough on the very top of the roof. We couldn't see it from the street, but my home inspector noticed it, but there was 3 shingles missing off the top of the roof. And obviously if there's shingles missing, you know, that's prone to having water infiltration down the road. So we got them to go up there for a professional to fix the roof. They put the new shingles on and fix it all up and provide us with receipts and proof that it's fixed, right? So that was a major issue. Same thing with same thing for like electrical. If you have breakers that are wrong or wired incorrectly, we'll get them to fix it, getting a certified electrician in there to fix that, right? So now a couple things is some sellers don't want to fix it themselves, whether they're not even here anymore and the house is vacant, or they just don't want to deal with it. They might just knock them off the purchase price and say, you fix it, we'll knock them off the purchase price and continue on. But we would like the major concerning stuff to be fixed prior to you moving in, and that's what I strive for if we can. Okay, and so even my own house, for an example, when I did a home inspection on my own house, it was about 4 years old when we bought it. There was a leak, a small leak coming from the upstairs shower, leaking into our main floor bathroom. It is a slight leak, no major damage or anything like that. But if we would never have caught that in a home inspection, that damage would have been a lot of money over time with all that water damage and mold and things like that. So it's so important to have these done, so that way we can make sure the house is good to go, has all the maintenance tips for you and things like that, and make sure that your investment is sound. Okay. So again, I've never sold a house yet without an inspection. I never recommend not doing it. You don't have to do it, but I never recommend you ever get one without a home inspection. Like, it's so easy to miss a lot of things in these houses, and it can cost you a lot of money in the long run, especially if you don't know it. Right. So again, I come in and I can help you guys get that fixed for you before you move in, or money knocked off. All right. So That's about home inspections. Again, it's part of the conditions. If it's not good, we walk away. So I got about 5 minutes here. I'm going to run through the last little bit before we get to the Q&A on this and let you guys get out of here. But if we are buying a condo, whether it's a townhouse, detached house, part of a condominium, or an apartment style condo, this is built into the contract and it's called the estoppel package. So it has all the workings of the condo and everything about it. So what's not mandatory is getting this reviewed by a lawyer. So like a home inspection, I highly recommend a lawyer reads this. I know the lawyer that we recommend, they don't charge extra to review this as long as you're using them for the whole deal. They won't charge you extra for this. And it's just so important to get this looked over because they'll know everything about it and make sure that the condo fees that you're paying are getting split up to the correct amount to go into the reserve fund and the maintenance fund and things like that. So that is one of the biggest things to look for is a reserve fund with a condo. Make sure there's enough money saved up in case of any major repairs to the buildings. Just an extreme example, let's just say for $100,000, they have to fix the roof and they have no money in the reserve fund, none at all. So what they do is call a cash call where they come to each unit owner and ask them for money. So if there's 20 units in this condo building, they're going to ask each owner for $5,000 out of their own pocket to fix it. So that is why it's so important to find out how much is in the reserve fund, because we don't want you guys getting a cash call when you move in. All of a sudden you move in and they want $1,000 from you to fix something because they didn't have the right funds for it. So the lawyers are going to look at that. They're going to look at how much is in the reserve fund, what needs to be fixed, what has been fixed, and if they have enough money in the reserve fund to fix that, okay? And make sure that the condo fees are being allotted to the right funds and things like that, okay? So that's what they can do for you. It'll also tell you the bylaws of your unit, so what you can and can't do with your unit when it comes to renovations and things like that. So again, saving you money that way. We don't want you to go in there and start ripping things apart and putting new flooring and things in, and you find out after the fact that you can't do that. And now you have to re-rip that stuff all out, put new stuff down and just double your cost. Plus you could get fined for it too. So again, we want to make sure we're saving you money in that regard as well. But this has all the inner workings of the condo in this package, tells you everything you need to know about it, and things like that. But again, definitely needs to be reviewed by a lawyer to make sure that you're safe and you're covered. Okay, it's going to save you money in the long run. And again, if there's something in the estoppel that's wrong or it looks bad, we can walk away from the deal as well with this, right? You do not have to proceed to buy the condo if they're not putting the right amount of money into it and it just looks like it's a very poorly run condo corporation. We can walk away from it as well. So again, for most of this, the main thing comes down to Ryan and myself are here to save you guys money, not cost you money, to make sure you guys are investing your money to the proper way and the right way, and not losing money on a bad property. We're here to get you guys started into a starter home to eventually grow into, potentially your forever home. And that's what we want to do, is make sure your first start and your first initial investment is a sound one, so you can sell it for more money in the future. Anyways, I see that a lot of questions are going on here. That's pretty much it for now. That covers everything. Thanks, Edgar. I appreciate it. We're going to be in touch later on. But again, for everybody here, that covers everything that we can in this one. Like I said, I can go on forever with this, but we just don't have the time. Book a call with us if you want to move forward, or you want, what your options are. We're definitely there to help you guys out. When you do book a call, it's going to look something like, I guess I could ask you guys that, but it's going to look like this. Brings up our calendar and you just book a time that's convenient for us. But now, with that all being said, I really hope that we kind of helped alleviate some sort of, stresses for you guys, and let you know what we are here to help you guys with and what we can do for you guys. Again, if we haven't alleviated a lot of that, definitely book a call with us and we can help you guys out and explain more in detail about anything in here you'd like us to explain in detail, because we could go on for hours with this. But thank you. We're kind of now into the Q&A session. So I've been talking a lot. I might just let Ryan kind of jump in here, and I'll see if there's any questions that I've missed or that I can elaborate on. And we'll stick around for as long as you guys want. Feel free to keep throwing the questions out there.
Oh, another great session, Andy. And some great questions coming through. Everything from first-time home buyers to new to Canada, to the first-time incentives, to appraisers and inspectors. Lots of great questions, guys. So as Andy mentioned, this is really just to almost kind of scratch the surface and get you, really high level kind of how the process is going to go. The best thing to really get moving forward and get some solid information is to book that one-on-one. Andy's put that link in there. Click the link. What we do is we have that really nice in-depth conversation. We find out a little bit about you, about your family, about your needs, about your wants, and what things are important to you. And we really narrow it down to finding you the best home, finding you, mortgage options that are really important to you and your family, and going through and ensuring that we have the right steps set up to make that approval process really nice and seamless. Once we do write an offer, there's about a 2-week window, as Andy mentioned. So the more information that we can get up front, and really kind of make sure that we do kind of cover all those bases, the better that approval process is going to be. And it becomes really nice and seamless, and we can get you into that condition approval and that mortgage approval quite quickly. So give us a call. We'd love to talk to you, even if it's just to ask some really, really specific questions on your situation. We'd love to talk to you. So click the link. Let's have a good chat. And we'd love to talk to all of you. Some great questions still coming in here, I think, Gabe.
Yes, there is. Yeah.
I think you got that one, Andy. What's the first? As a first-time home buyer, only usable once per couple, not once per person. It's one per person, right? So if you're buying and you have 2 people and one of them is a first-time home buyer, you're allowed. If you have 2 people that they've both owned a home previously, unfortunately, it doesn't work. So at least one of the people in that couple on the mortgage does have to qualify for that first-time home buyer incentive to go forward.
Yeah, and you can only use it one per house, right? So if you're buying a house, you can only use the incentive once for the mortgage. You can't get, if you both haven't owned a house, you both can't get an incentive together, right? Like it's not going to give you both each 5%. Yeah. There's another one. When considering purchasing a home with a basement suite, is a potential income from the suite taken into consideration when determining the mortgage approval amount? That's right up your alley there, Ryan.
That's an absolutely great question, Brill and Vanessa. Thank you so much for that question. Absolutely. So if there is a home with a suite in it, the catch is the suite does have to be legal and conforming. And what that means is it's got to be legally approved by the city of Saskatoon. And conforming means it does have to meet the the specs that are set out by the city. So as long as the suite is legal and conforming, yeah, absolutely, we can use 100% of the income coming from that suite to add on to your mortgage approval. It basically factors in additional income that will help you qualify for a higher home. Great question, bro.
Yeah. And so I know you'll see a lot of houses on the market that have a basement suite, but a lot of the times they are non-conforming ones, so you can't use that in. But if you do end up buying it and renting it out, you can obviously use their income to pay for your mortgage. But you just have to be aware that if you ever get caught renting a non-conforming suite out, that you have to bring it up to code. And so it's some things we can talk about as well. If that's your biggest consideration, then we can definitely talk over that and what needs to be done with that. But yeah, good questions, everybody. I don't know if there's any I missed. I was kind of trying to scroll back, Ryan, but it seems that you've as always, you've covered every single thing. So I don't know if there's something I missed or I can touch on. But again, everybody, just if you got any more questions, there's still a lot of us here. We've got some time. We'll still crush some answers out for you guys. We'll stick around if we need to. So keep them coming. I don't know. Did I miss anything, Ryan? Do you think?
I don't think so. I think we covered it well. The one thing I wanted to point out, guys, is know that Andy and I are here to really walk beside you and help you all the way through the process. We work really well as a team. We literally talk every single day, the two of us. So we're here to really make sure that we navigate the market. We make sure that we answer questions like, yeah, is this basement suite legal and conforming? We have that information. We make sure that we kind of go back and forth and make sure that when we do give a pre-approval, it's based on a solid amount. We're not kind of just guessing out of thin air. We're going to talk to you. We're going to analyze your income. We're going to have a look at the credit. We're going to talk to the down payment and really get you a number that zones in on your purchase price maximum. So like Andy mentioned, there's no point in looking at a $600,000 house if your income and down payment really are going to support more in the 420 range or the 380 range. we want to make sure that when you write that offer and you fall in love with that home, that we have a great chance to be able to close that mortgage and get that home approved. So that's why we go through. We want to make sure the not only the information, the flow of information is really nicely done, but back and forth. You have all the answers to the questions that you want, and we can really properly assess, all the information coming in, and maybe navigate any potential pitfalls. If you say to me, hey, Ryan, I don't have my down payment brought over, we're going to say, hey, you know what, make sure that's done right away. We do need to see that sitting in an account for typically 3 months. So we're going to go through and make sure that we're getting you all the best information to get that set up. And the biggest thing, again, click that link, guys. We want to talk to you one-on-one. The session is great and informative, but we really want to narrow down. We want to talk to you one-on-one and find out what's important to you, and help you the best way that we can.
Exactly. Yeah. I want to reiterate something too. I won't get into a lot of details with it, but just something else that Ryan and myself can do for you guys. Like I said, a lot of times everybody's different when it comes to these approvals, right? So if you're not sure of what you should be doing with it, please, yeah, just don't guess about it and think you're doing the right thing, because sometimes it actually hinders you. Again, not diving into details, but Ryan and I have been dealing with a customer or client of ours, and he was going to be borrowing money from a family member, which was fine, but he never did disclose everything to Ryan, and he went about it the wrong way, and turned out that the money he borrowed was from the wrong person, and it wasn't allowed. Like, there are certain people that it will allow to be borrowed from. So before you start borrowing money from people, make sure you talk with Ryan and find out the best way it is to go about it, or how to use your funds properly before we get too late where now we have to start over again. All right, that's a huge thing, is Ryan's able to let you guys know exactly what to do and how to do it, and make sure we don't get caught into an issue.
Let's see, do we have another question here, Andy? Yeah, great question from Sanjay. Driving factors for Saskatoon is property appreciation. That's a great question. It's a bit of a loaded question, but it's a great question. We have definitely seen some price fluctuations over the last few years, not only in Saskatoon, but across the province and across the country. We saw a lot of different factors when COVID first came in, with really the entire world was stopped from contacting one another. The government of Canada really was unsure if the whole housing market was just going to stall out. So we saw rates go down, but we saw a lot of people that were still looking for housing and looking to get into housing. In fact, we had probably 2 or 3 of the best years in the housing, the housing market, not only in Saskatoon, but across Canada during 2021 and 2022. So we have seen some of that lift start to come down a little bit as different factors. Rates have come up a little bit since the COVID lows. We're back kind of in a normal range, right around 4.5%. So we're kind of back in that normal range for rates. The biggest thing that I think we're seeing is, this is really the best time to have a great professional like Andy helping you look for properties. There's not as many homes on the market as we typically have seen in the past. So having that great representation to be able to not only find you the best stuff as soon as it hits the market, but a master negotiator to be able to get in there, get this offer done quickly, and really help you navigate that all the way through quickly, super important. So having that great realtor partner, and Andy to really help you navigate that market. As far as appreciation, we are not seeing a lot of the price drops that, say, Toronto and Vancouver's have seen over the last year. We're kind of on a nice steady curve. We're seeing prices appreciate, anywhere in that 2 to 3%, which is pretty normal for the Saskatoon or Saskatchewan market historically. So we're back on that normal curve. We expect that trend to consider going forward. So if you are on the fence and you're thinking that price is going to come down over the next year, it's not. They're going to slowly keep going up. And we want to see you put that money, that payment that you're making, into your own pocket, into your own mortgage, as opposed to giving it away for rent in your landlord. So getting into a house now, super important. You factor, you're probably paying in rent $1,500 or $2,000 a month. We want that money to go into your pocket every month, not into your landlord's pocket. Over that year, even if it's, say, $2,000, over a year, we're talking, you know, potentially 15 or 20, $24,000 worth of equity that goes in, plus the you know, that 2 or 3% property appreciation every year as well. So every year you stay out of the market, you're actually losing a lot of money. So let's put that money in your pocket, take it out of your landlord's pocket, and get you into some great houses. Great question.
Right. I kind of want to touch a little bit on that too, is that not more the appreciation side of thing, but just for using, you know, Ryan and myself, representation when it comes to buying a home is huge. I can't stress how huge it is enough, right? Just having somebody like, you know, a great professional like Ryan helping you through the mortgage process to explain everything for you, plus having a great realtor to help you guys find the right place. Somebody that knows what you're looking for, knows what you guys are about. You've searched homes together, you know what to look for, and you're not just hoping that the one random person you found can just do it for you. You know, you want representation for this. You want somebody who's going to be there for you, that's going to answer the phone for you, that's going to provide you with all the info you need, right? So again, it's huge. So I just wanted to keep that in mind. Communication and representation are the biggest things that comes with buying a home as well. There's another question here. Can we get 5% from the government if someone makes a 15% down payment by themselves and avoid insurance? So no. If you put 15% down, I see Ryan just covered it there too. Yeah, if you put 15% down, they will not give you 5% to go over 20%. They're only going to give you that 4.9%. The government is not going to help you exceed mortgage insurance premiums in that 20%. So just be aware on that. But that's a good question.
Yeah, the big thing on that, just to, you know, to kind of just give you a little bit of understanding on the program, it's really designed for people to help people get into housing. If you've already got that 5 or 10% down payment on your own, it's probably not the program for you. You don't even need to worry about taking the extra 5% to put it, you know, give it back to the government later. If you've got your own down payment, just run with it. You probably don't need that. That first-time home buyer incentive is really for people that you know, either need the extra payment, you know, the extra 5% to get into the right home. Maybe it's to get their payments in line and maybe be able to buy a slightly higher priced home and get their payments more in line. But you know, it's really not to, if you've got that down payment and your deal works, you're probably just using your own down payment and that first time incentive isn't for you. So hopefully that answered the question.
Can we use first-time home buyers incentive along with newcomer home buyer incentive together? Now, are you talking the New to Canada program along with the first-time home buyers incentive, or did I miss something on that?
I think that's probably what you know, she's asking. So yes, you can use the first-time home buyer incentive with the New to Canada program. Now, that just to clarify that as well, Somi, the New to Canada program is not an incentive. It's just a program that we can use to help support your credit, because you probably won't have a lot of credit coming into Canada recently. So, but you can absolutely use that first-time homebuyer incentive under the New to Canada program. Absolutely. Great question.
Yeah, these are a lot of great questions, guys. And if you guys like, we've got some time here, we can still answer some more. But if not, again, I put the link in there. I'm going to keep putting it here. I see some people have already booked with us. That's great. I look forward to talking to everybody. But yeah, book that call with us. Let us get to help you guys out, whatever it is you need, whether it's now, a few months, a year down the road, whatever it is, we're here to walk you through the process the whole way, right? So again, the whole approval process, not black and white, but you know, if we can't get it, then we'll work with you on how to get it.
Great question on the first home savings account. This is actually fairly brand new, Rahul. So I'm very impressed that that this has hit the radar. So this is actually something that the government designed and it rolled out April 1st. So it's actually fairly brand new. There's not even a lot of lenders or banks that are offering it. Most of the major banks are just starting to bring this online. I know that Questrade had it out, and I think RBC has now put it on their market as well. So what it is it's basically a registered account, but it almost has the advantages of both an RRSP and a TFSA. So what it allows is that you can put money into that first home savings account, that FHSA. You do get that tax break, same as an RRSP. And then, you know, when you pull it out, you're not taxed out on the back end like a TFSA. So it's really got dual benefit to it. Like I said, it is brand new. Lenders are just starting to roll it, you know, online. So we don't have a ton of information on it yet. I think it's a great program. If you can get into it and use it, take it. It's a program that I don't think will be around very long, because they're, you know, it's pretty cost heavy to the government to do that, because they're losing a lot of money on the tax side. But there's some great tax breaks. You're going to get the tax breaks putting it in, and you're not going to be taxed taking it out, which is fantastic. So if you're really looking for some great information on it, the Government of Canada website has some great information on it, or contact you know, contact your current bank as well. They have some great information on it as well.
Other questions? Yeah. Great. Yeah. Anybody else have any questions before we say goodbye to everybody and continue on with the evening? Again, the booking link's there, so if you forget or anything like that, definitely book a call with us. It's right there. Again, I'll reiterate, this is recorded. Once we're done here, I will have it uploaded to YouTube on my YouTube channel. And then I'll get that link out to everybody tomorrow in an email. It's going to come with the recording, the booking link, all our contact information, my complete guide to buying a home book, and buyer's guide as well. So that email is going to, you might have to watch. Sometimes it lands in your spam folder, so just check that, but it will be there. If not, just reach out to me directly. I'm going to put, you know, I should have done that earlier, but I'm going to put everything in here as well. That's the booking link, my email, my phone number, and my link tree, again, with all my social media accounts. So if you missed something, reach out to us. But definitely for the initial one, I would recommend booking a call. That way we are both on the same time page. You know, we're on the same time that works for everybody. And then once we get that first initial call out, then you'll have my number. You can call or text anytime. You can call or text Ryan anytime. We'll have his contact information too. But just so we make sure we can get that first call with us, just book that call with us. But yeah, again, I don't know if there's we appreciate you guys watching with us tonight. I know it's a nice evening out here now that the spring is here. It's great to get out. So thank you guys for spending your evening with us. I really hope that we provide at least some sort of value to you guys and show that what we and Ryan and myself can do for you guys, work with you. And I do look forward to talking to every one of you again down the road. If there are no questions, I guess that's going to be a wrap for us tonight. Hey, what do you think, Ryan?
Yeah, it's been absolutely great, guys. Fantastic questions. And as Andy mentioned, hopefully that you know, you've seen some value in the experience that Andy and I have. We've been doing this for a long time. We've navigated through a lot of different landscapes, a lot of different markets, and you know, let us help you. We want to find out what's important to you and help you all the way through that process. We're looking forward to talking to you one-on-one. So reach out, click that big booking link. But I don't see any more questions in there. So for, you know, from my family to yours, hopefully you guys have a great night and a great summer, and we look forward to talking to you all real soon.
Sounds good, everybody. Thanks again, everybody. Appreciate it all. We're going to talk soon. Take care.